Hi, good afternoon and warm welcome to all of you on this webinar hosted by Khaitan and Company Tax Practice on the important subject of introduction of section 194R by the Finance Act 2022, which deals with new provision of TDS on certain benefits and perquisites provided by a business to certain recipients in the course of business or profession. To make this webinar, I have with me my partner Ashish Mehta. We both will be taking you through this webinar, and the structure of this presentation is to give a broad idea of the whole structure of the section, the intention of the new provision, and some of the open issues. Despite there being two clarifications by CBDT, we have tried to touch upon some open issue which will or which are more likely to arise in the day-to-day administration of a business or profession. So with this opening remark, I am requesting Ashish to start the presentation.
Thank you, Sanjay.
And please feel free to raise your question as and when you feel appropriate. Let's try and make it as reciprocal as possible. Thank you.
Thanks. So basically, the provisions, what are we dealing with here? There is section 194R, which was introduced effective 1 July 2022. Then there were a couple of clarifications that were issued, which are in the form of a Q&A. What we've done is, for ease of reference, we've called the June questionnaire as FAQ1 and the recent September FAQ as FAQ2. The whole concept here is what they're trying to do is tax or bring into the tax net transactions which were earlier.
You have entered as an attendee in listen-only mode.
Which were earlier not within the tax net. So take an example of a situation where an individual just received a gift from one of the clients and did not pay tax on that. So basically, say a consultant received a gift from a client and never reported it. Now the onus is on such a client to report this transaction and have all the filings done, do a valuation of what the gift would have been valued, and then pay taxes thereon. The legislative intent of the provision is on the screen. Basically, when this was introduced, it was introduced as something which is a tax on the recipient, and it is the buyer, it is the payer who is required to do the transaction and do the TDS on such a transaction. The FM speech was very clear here. What was intended, or at least what was alluded to at the time of the speech, was that the tax will be in the hands of agents. By the time the act came into the being or it was released, there was a certain sect there. Later point in time, there were a couple of circulars released, which somehow seemed to increase the tax net or widen the tax net beyond what was the intention of the budget speech as well as the law. We will come to specific instances where we think there has been an outreach of sorts on behalf of these circulars when they were answering questions. Of course, this is CBDT's interpretation of these questions and answers, and this will be tested in courts. There will need to be a harmonious reading of everything. So even the budget speech, the memorandum, the circulars which have been issued, there could be a situation where there are still unanswered questions, and we could see one more or maybe a couple of more circulars coming in, because this is a burning issue. There are questions raised on each and every point that is being discussed in these questions. The next slide is very briefly on the scope. Sanjay, you have.
Thank you. Since this is a small section, relatively small section, new section, but huge implication, we have done detailed analysis of the statutory provision and what could be the possible implication. For the benefit of the group present here, I just want to emphasize the language of this new law, because whatever one is deriving from this section in terms of impact on his own business professional has to be tied to the specific language which explicitly gives the intention of the government. It reads like this: any person responsible for providing to a resident any benefit or perquisite, whether convertible into money or not, arising from the business or exercise of a profession by such resident, shall, before providing such benefit or perquisite, and as the case may be, to such resident, ensure that tax has been directed in respect of such benefit or perquisite at the rate of 10%. So the point is, there should be a positive act on the part of, let's say, A, when it is providing some benefit or perquisite to B. In that background, we believe the implication of this new law should be examined.
Thanks for that, Sanjay. So coming to the scope and applicability of the provisions, what we've done is very quick bullet points, quick and dirty, working on how the provision is to work. As Sanjay explained, the nature of payment is a benefit or a perquisite that arises from business or exercise of the profession. The payer needs to be any person and individuals who are generally in tax audits. The payee has to be a resident of India. The tax event or the time when I need to withhold taxes is when the benefits are provided. So the position here is, if I am going to gift say jewelry to somebody, I will have to make sure that at the time of gifting the jewelry itself, I will deduct, or either I will take money from the person and deposit, or I will pay from my pocket and deposit that TDS rate of 10% on the gift that I'm giving the person. The timing, of course, is before providing the benefit of perquisite. There is a small threshold prescribed of only 20,000. There have been a lot of discussions about this as well. Ideally, this should have at least have been the 50,000 limit, which is applicable in income from other sources, where you could have received at least something which is worth 50,000 from even non-relatives. But that is not the case here. They've kept this kept a very low threshold, and the liability to deduct is again in the hands of the company, as well as the person who's actually, in a non-company case, the person who's actually providing the benefit. The scope and coverage of the provision. So basically, now we'll delve on actually what has been discussed in the questions, and what we've done is we've tried and clubbed all the questions that are relevant together from both the FAQs, and like what we've done is, on one side we've put in the guidelines and a very brief summary of that, and the questions and the issues that may have arisen out of such an understanding of these questions, or at least the CBDT's interpretation of such provisions. So so unlike section 195, which for the benefit of everyone is a provision where I am required, when I'm paying an amount to a non-resident, I need to ascertain whether that amount is taxable in the hands of the non-resident. And if it is taxable in the hands of such non-resident, I need to pay tax, and I need to withhold tax before I make such payment. Similarly, here there is no such thing. I don't need to bother whether the amount is taxable in the hands of the recipient or not. All that I need to do is I need to ascertain whether what I'm giving to somebody else will fit into the definition of a benefit or a perquisite, which is quite a wide net as per the guidelines. And I just need to deduct TDS when I'm parting with a gift, or I'm giving money, etc. Of course, again here their interpretation is even wholly in cash. So basically, you could have given somebody either cash, either something in kind, say a jewelry, or something in partly in cash as well as partly in kind, which could be a combination. There were questions raised based on previous judicial rulings as well, on whether the language being similar to section 28.4, would it be a situation where only cash gifts or only cash payments to somebody, whether that will be treated as a perquisite or not. they have very clearly, without having referred to the Supreme Court ruling in the Mahindra and Mahindra case, they have just gone ahead and said they are interpreting there is a proviso prescribed to 194R. Their interpretation of the proviso is because the proviso does consider a situation where part amount is cash and part amount is in kind, but they still go ahead and say no, nothing doing, ascertain the value and go ahead and calculate and pay taxes. In their mind, they're trying to say that this covers the situation and therefore they don't need to refer to either the Mahindra Supreme Court ruling or anything and just go ahead. Sanjay has a point.
Yeah, here one has to consider whether, as per a settled principle of law, can a provision override the main section? If section says a benefit whether convertible into money or not, can you say that even non-cash item or cash item rather is also part of this TDS section 194I? So I think this provision is in direct contradiction with what Ashish mentioned. Supreme Court ruling in the case of Mahindra and Mahindra. So one will need to be mindful of that. And somewhere it will get into litigation for sure.
Yes. Also the requirement, or at least there have been continuous questions asked whether I need to ascertain whether the person receiving the gift needs to pay tax on that or not. They have clearly laid down 2 points. One, you don't need to ascertain that. And second, if at all the recipient is in a position or has a favorable tax position which it wants to take, it can always take that independently of the amount having been deducted. So this will deduct, so the amount will get deducted. It will reflect in your tax filings. It will reflect in the 26 ESs of your of the recipient. But the at least the circular is clear that that alone does not become a reason for you to pay tax on that amount. You could take a position. So in the example that we just took up a little while earlier, where I get a jewelry worth 40,000 from someone, although there will be a 10% deduction on that, but because it is within the 50,000 limit, I might not end up paying tax under section 56, and I can claim that as an exemption. But still, there will be a deduction of 4,000 which happens, and then I'll have to either take a refund or adjust it against my other incomes. That is the crux of the initial questions that they've kind of answered. There are open questions like whether 194R their interpretation of these provisions is exceeding what has been written in the law. So it is a settled position that clarifications, circulars, FAQs, etc. cannot go beyond what the language of the provision is. So they cannot cast a wider or a higher requirement on or a higher threshold for a taxpayer.
So one really wonders, reading both the circulars together or both the guidelines together, one wonders whether 194R is really a TDS section or it's a charging section.
Absolutely, yes, yeah. So they seem to be trying to put in a lot of things and casting the wide net, and then they'll kind of see what comes out. So that's generally been the trend that they're trying to look at. A practical point here, there have been, so if there are substantial amounts of gifts received or substantial amount, which is a very normal thing in a lot of industries. If you received, say, a very large amount and tax has been deducted on that, but when you're filing tax return, that amount does not reflect in your returns. There have been instances in the past, and there have been internal guidelines where the department looks at that as a reason to pick your case for scrutiny. So that will be one thing that one will need to be mindful of, because you could end up getting notices for things that are not taxable, and there could be a lot of hassles around that. The next point that we needed to cover in the overall scheme of things is discounts being given. It's very funny the way the way they actually say what a benefit is. So basically, if I were to give a very simple example, if I have a good if I'm a manufacturer, if I'm an iPhone manufacturer, I have a product which costs 70,000 rupees. And if I were to, and by cost I mean the MRP, and what I charge to my uh, reseller is say 65,000, and he makes a 5,000 profit on every iPhone that he ultimately sells to the end user. What they're trying to say is even this 5,000 discount, or even this 5,000 lesser price that I'm charging to uh, my reseller or such, that amount is also a benefit. But because making with tax withholding on such amounts would be a nightmare for the sellers, they're saying we are accommodating, and we will not treat this, and we will not require the seller to deduct tax on such amount. So which is quite a bizarre thing actually, really, because it's everywhere. So every transaction that you would do, you would never sell immediately to the wholesaler, the retailer, or whoever is in the chain. You will never sell to that person at MRP. There always be some scope for every chain mechanics to work. So that bit also, according to them, is a benefit, but they're kind enough not to ask for a deduction there. Similarly, it is in this question specifically, there have been a lot of discussions about what if I give out a product free on another product, or say a couple of products free on somebody purchasing 10 products together. That also they seem to say, yes, this is also a benefit that is accruing, but we will let you go. We won't ask you to deduct TDS because of practical difficulties that there may be. However, they are very clear when you are say charging, or when you are say giving a gift, or you giving say free IPL tickets, etc., etc. Those kind of or giving medical samples to doctors, those kind of situations will definitely fall. And if you're exceeding the threshold limit of 20,000 per person per year, you will definitely have to withhold taxes, because that is what the whole intention of this law is. Gone are the days where your supply chain could have received say products in lieu of a certain turnover that was received or achieved. So those kind of things they're trying to target, and they're trying to see so that the whole value chain, or wherever the value addition is happening, is getting taxed at each level. Again, a similar point here. So basically, they've not exactly defined what a customer is. And on the next slide, when we come, we would see basically what issues one might face when it comes to this. So I could be a manufacturer who then deals only with say a wholesaler. So all my products will be sold only through my wholesale chain. The wholesaler will then interact or have retailers do it for them. Retailers will further probably have a reseller who will work at a very small margin. And then ultimately the customer is the person who's the third party buying the products. In this entire chain, there could be a situation where I give some discount to the wholesaler for buying in bulk, as well as his margin, which according to them is a benefit, but no TDS is required. Let's take a situation where I although have no privity of contract with the retailer, but I give them certain incentives in terms of achieve X number of sales, we will give you Y. If you achieve uh, double the turnover you did last year, you will get something extra. Those things are kept generally to incentivize even the retailer, the resellers, and keep them in the loop, so that you are not wholly dependent on the wholesaler all the time, and you're some way or the other in touch with the retailers, resellers, etc., etc. It's not very clear who your customer is in this entire chain, because you're selling only to the wholesaler. So as far as you are concerned, your contracts are all with the wholesalers. It's the wholesaler who then deals with the retailer, and then the chain goes on. So in such a situation, what happens when I say give an iPhone to a retailer for achieving a 10 crore sales for a certain year, or maybe a trip which I sponsor for his and his family. So those kind of things are now going to be included in the valuation that I need to do, and I need to withhold TDS. I need to take the retailer's PAN. I need to take the reseller's PAN, and have all those administrative hassles of depositing TDS every time I'm giving anything to them. So it's going to be a lot more everyday activity which will get affected by all of this. The next point that was raised uh, here is really which is again affecting the pharma industry quite a lot. Uh, could actually impact a lot of other manufacturing industries as well, but pharma has been their favorite for some time now because of a lot of case laws, a couple of circulars that had come on what a doctor can do, what is ethical, what is not ethical. So and their interpretation in Section 37(1) of the Income Tax Act. But basically, the crux of the circular here is let's take a situation where a pharma company wants to wants their product to be more visible, wants the doctors to prescribe their medicines, wants the doctor to have got a feel of what the product is. So in such a situation, what happens is the doctors will be given free samples. Uh, the whole intention or the intent of the law is that the doctors should be that these transactions should be tracked, and the way they have kind of decided to track this is make the hospital responsible here. So what they are trying to say is the moment there is a payment that happens to a doctor who is either associated with a hospital as an employee or as a consultant, they would assume that the benefit is going to the employer and therefore deduct the amount in the hands of the employer. And the next step that they say is if at all the employer or the hospital in this example wants to further make sure that this claim is available because the medicines have actually gone to the doctors in their personal capacity most times, what will happen is you will have to say that as a salary, deduct TDS as salary on that amount as a perquisite, and then get a deduction for that amount. So ultimately, there will be two levels of TDS happening on an amount which till today was not even in the systems or not recorded anywhere. This will widen the tax net quite a lot. Of course, there will be a lot of hassles because doctors wouldn't really be keen to give their PAN all the time. And that is also one reason why they've tracked this onto the hospitals, because it is much easier to track and to chase a hospital rather than chase so many doctors. So practically what they've tried to do here is fasten the liability on the hospitals, and of course they've kept the government hospitals out of this. Uh, the issues which could come out of this are multifold. One is, let's assume a situation where a doctor actually gets a medicine which is say worth 20,000, more than 20,000 in a year, but he gives them all out as free samples forward. So he is not benefiting, he's not charging his patients for that. Will he get a deduction for such a free give out that he's done? That's not very clear. Whether he needs to track how he's used it, if at all, if he wants to claim such a deduction, is a question. Also, when a doctor is an employee, there is anyways no way he can claim anything out of his salary. So even that is a loophole which probably should be addressed. Also, no clarity on exactly how do you value these samples, because it could be a situation where so basically for valuation, of course the valuation will come to at a later date, but basically for valuation there are three broad guidelines. One is the market value, second if you're manufacturing the MRP that it would have fetched, and third if you've purchased, then just the price that you've purchased it for. In case of a sample, I don't think there will be a real market because these are not tradable. The sample sizes would be small, probably not matching with what is ultimately going out, or maybe small, large, depending on a lot of things. So there are a lot of ambiguities. all of this will be on the pharma companies, and there is quite a lot of discussions going around this, where there is absolutely no clarity on exactly how things will pan out. We will have to see like how things pan out, how people are actually incorporating these. Similarly, when we move on to the next slide, there is this is basically a very quick understanding of how the working is. So basically, a company provides benefits to C. In our example, the pharma company is A, and the perquisites or benefits which are given to C. C is the doctor, who is an individual or an employee of B company. So B company here is the hospital. So basically, what is happening is when the pharma company is paying even directly to the doctors, it is supposed to deduct TDS in the name of the hospital with which such doctor is associated, either as an employee or as a consultant. We could move to the next slide. So basically that's what it is. The intention is to try and get as much into the tax net as is possible, and then and the burden is of course on that person who is giving these samples, or who's giving the gifts, or who's giving these benefits out.
So really, Ashish, here a careful and fine distinction needs to be made by a business, whether whatever I am providing to my customers, clients, suppliers, is it really a benefit and perquisiting through commercial side? I think that will be the guiding factor to determine whether TDS will apply.
Absolutely correct. And in that context, we have a example here where what we've tried to do is list down a very practical position that anybody could face. So basically, there is a company which is into manufacturing specialty chemicals. Say they do customize a lot of their chemicals as per the requirements of their clients, and the value of these chemicals are pretty high. So what happens is I approach a certain potential client of mine. He asks me for certain type of chemical to be created for me, and give me a sample, and if that works, I'll probably get a large order from that person. Now I do a lot of permutations, combinations. I do end up at least supposedly thinking what I have made, what the client wants. But ultimate, and I have to give it to him for free for the time being, because I can't charge him until and unless the product is okayed from a QC perspective, etc., etc. So basically, you end up, say, assuming giving them chemicals which are worth 10 lakh rupees, and ultimately the transaction does not go through. The customer doesn't think you've done a good job at what you were asked to do. The requirements are not met, so, and the quality is not up to the mark, so you end up losing that customer. What happens here is, not only have you lost the customer and the 10 lakh rupees, there will also be supposedly an additional liability of 10% of the amount, and that too you have to pay, or you have to give at the time you're passing on the product to them, and not after you would have decided. Because there could be two situations. You could actually get an order, which would then mean this was probably a free item along with what you would have got a purchase order for. But not for that. If there nothing materializes, this entire amount is gone. You will have to definitely claim it as an expenditure in your books of accounts, and you'll probably have to do a grossing up of sorts, and deposit that 10% also. So not only have you lost the 100%, but also a further 10%, which is not coming back to you anytime. So here the whole this thing is one like we were debating internally and discussing quite a lot. This kind of situation should ideally be, or the business reality should really be considered before such a decision is taken. And it shouldn't be that just because something has gone, and it's actually not even a benefit that is accrued to the person, because the customer, the potential customer never got any benefit out of this 10 lakh rupees. So ideally there should be some sort of a carve out there, where there should be some scope for incorporating genuine difficulties or genuine business realities into these provisions. Uh, so basically, that's a case study where we've kind of tried to do a little bit of analysis. Again, this is also a very administratively, this is going to be a very big issue. So generally, there is always a situation where say us as lawyers, we work on behalf of our clients, and we charge them out of pocket expenses, or we charge them for airfare, we charge them for anything else. So basically, every time what we will need to do, or what we'll need to ensure, is every time that we expend any amount on behalf of the clients, and an invoice is being raised, we will need to ensure that the invoice is in the client's name. Or if it is in the consultant's name, then we need to have a pure agent mandate, as is very famous in the GST laws. So basically, it's a much more bigger administrative hassle now for companies to consider reimbursements, and make sure that each and every invoice that is being charged to them as an out of pocket or as a reimbursement of expenses also meets the criteria of it being there in the name of the company. This again is and if that is not the case, then there is a TDS that is looming. Of course, there is already another provision, 194C or 194J, which is likely to cover such a situation. So they have given a carve out. If at all deduction happens there, then there is no further deduction required at the 194R level. So basically, that's what it is. Again, as we very briefly alluded to at the time of at the beginning of the presentation, basically the valuation, how does that happen? And that's very clearly mentioned, but interpretation is the whole interpretation, I think, will lie here. The general rule that they've prescribed, it should be fair market value. So if you've got shares as a gift or as a benefit, and that is one of the specific items that they have mentioned in one of these FAQs, if you've got shares as a director of the company, this will be liable for a 194R deduction. How do you value those shares? Nothing is prescribed in this law, although there are provisions like Rule 11, UA, etc., which will probably be guiding factors when you're trying to value the shares. Similarly, as I mentioned earlier, if the purchase, if the business or if the enterprise who is giving that product has purchased it, it's the price it paid for it. If it is a manufacturer, then the market sales price of the product. Again, the sales price is or the it's not a, it can move, and it can keep changing at every level. As we saw, there could be a price specifically for the wholesalers, retailers, etc., etc. What they are trying to do is, I think, try and have this on the MRP, which would ultimately, if the product goes through multiple levels, just imagine the number of TDSs that will accrue on each level, because this is not happening on the difference. So this is not on the value add that is happening every time. This is the 10% reduction is happening on the price, on the gross price of the product. So it could be a situation where a substantial amount of cash will actually get stuck in multiple levels of TDS happening at various levels. And again, there is ambiguity on what happens when there is a cash as well as a kind composition, and then how do you merge the two? Although there is a proviso which tries to address this situation, where they say whatever be the case, ascertain the value and pay tax or withhold tax on the amount. Similarly, when we move on to the next slide, this is a question specifically on shares to directors, as we alluded to. Again, a similar position. What they are saying is a company giving shares to, or allotting shares to its director for, say, nominal price, or without getting any consideration for the same, is taxable as a benefit which is accruing to the director. The shares will need to be valued, of course, unless there is another guideline today, probably under 11 UA, and then the same will need to be considered for deduction. And yeah, that's what it is. So basically, again a very much widely talked about subject is dealer conferences. which is again very prevalent in financial markets, in manufacturing industry, where you do a lot of dealer conferences, which is like uh, getting to meet your dealers, explaining them about your new products, asking them what the reactions of the customers are, trying to get a sense of what the market is, trying to understand or make them understand how the products can be sold better, what schemes, etc., are available. So those kind of things are generally discussed in events, and these are leisure come commercial events. So where say half a day would be spent discussing businesses, the rest of the day is for leisure. So a lot of emphasis in the questions have been on such issues where they want to bring even such dealer conferences into the tax net, where say the invites go out to a certain number of dealers who say have achieved a certain turnover. So basically, they don't want the target or the targeted audience for them, or the targeted taxpayers for them, is benefits that are passed which do not get into the person's bank account. So here, what they are trying to do is try and see if there is any foreign tours being arranged for dealers, which otherwise would have been an expense. If you were to pay them and then they were to do it themselves, there would be a tax element there. So those kind of situations are what they are trying to kind of plug here, and plug them at the initiating level itself by making the payer uh, duty bound to deduct tax thereon. So again, basically, how do you do this? Is there any benefit that is really accruing to people? If family is attending along with the dealers, would that be a situation where it is more tilting towards a position of a benefit rather than a business activity? Also, this does not seem to cover situations where directors, employees, or senior management, etc., is really going overseas as conference speakers or to promote their brands, or so there are these intangible benefits that accrue out of such activities. It's not just leisure for the directors, or most of the times it's not even anything of a leisure, but it's all business. But again, those kind of situations they're trying to cover. So there is, how do you draw a line between what is business and what is not, and how do you at the time of maybe inviting participants decide if that is a benefit or not, and deduct TDS is something which is going to be tested in courts time and again, and we'll have clarity on this only once we've hit some courts. But also there have been a lot of questions around what if these are large events. You can't identify who the real beneficiary is, because this could be a situation where you've called a lot of people, and people just join, and they are your customers. It's very difficult to have a database of all your customers, have their PAN. So there could be a situation where the beneficiaries are not known, or you're not able to identify exactly which beneficiaries received what. The crude answer, or the crude answer of the circular or the interpretation of the department in such a situation is nothing doing, don't claim the expenditure at all. So then there is no discussion at all on whether who received the benefit, etc., etc. So the point here is, if you're not able to deduct tax because you don't exactly or genuinely know what who is the beneficiary of such an event or such a benefit, uh, the suggestion that comes is don't claim the expenditure at all, which is a little harsh, because then you're just looking at, say, a part of it, and not the entire picture as to what benefits the company is already accruing, or the benefits or the goodwill, the branding that happens. So all those things, the intangible benefits, the dealers meeting of the customers, or you getting to interact directly with the customers, will give you a lot of insights. So that has not been considered really in the model. Of course, it's difficult to plan everything at one go, and therefore I'm assuming there will be more clarifications forthcoming here. Again, what we've done is try to do a case study on a franchisee model where let's say a company has Indian operations and has a pan-India presence. To give the customer a look, a feel of consistency all throughout the country, you would see the same brand having the same outlets, the same colors, the same type of lighting being used, the same clothes being worn by the employees, etc., which is like a sign. Okay, when you start relating to such things, then you know this is a certain brand where I will get a certain standard of product and services. So all of that, when is it that you would say this is a benefit or not? So basically, there could be two situations here. One is the franchise, the brand owner actually incurs the expenses on all of this, on having the furniture in a certain style, on having an accounting software which is consistent, on having uniforms which are consistent all throughout. So there could be two situations. One you could actually charge that out to the franchisees, but generally that's not the case. You would not, because this is your requirement, because this is your business expediency. There are it's more likely than not that you would end up bearing the costs for such things. Is that a benefit that is accruing to the franchisee or the dealership? That is a question that we've tried to analyze here, basis to views that we think are open for discussion. One view, of course, is and the conservative view is that 194R is applicable because there is a benefit that is being received. Because otherwise, this would have been an expense or a commitment which the franchisee would have need to do. Of course, whether it is a contractual commitment, whether it is not, of course, it will depend on all of that, because you could not be charging royalty from them because they are taking this expense on their head. So that kind of a position could also be there. The second view that is that this is done only for your own interests and not anything else. And if that is the case, then it is very difficult to kind of get into a position where you would say that there is actually anything happening, because here what you agreed to is contractually agreed and not charge that amount. So similarly, the so it's a wide net that they're trying to cast, and they will, like, at certain point realize what is happening here. So again, another very spoken about issue is about social media influencers. So there is always a situation where a lot of brands, what they prefer is give their products out to a lot of these people who analyze or who have their blogs or who write or give out videos after having used a certain product for a certain period of time, and they have a huge fan following who would then depend upon them to decide or to make decisions on whether to buy or not a product. When a social media influencer receives say a valuable thing, say a bag or something which is worth say 4-5 lakhs, the generally the understanding or whatever is that it doesn't return back to the company, because anyways, whether it will have a market or not is also, like, because it will, like, the influencer or if it is an electronic item, the person who is analyzing it would have done a lot of internal changes, etc., or would have used the product to understand how it is. So whether that will have a marketability or not is a question in itself. But let's assume a situation where the product stays with the person who is reviewing it. In such a situation, there is no clarity on how the tax will be, because it's absolutely clear for the department that the moment you've given a bag, say, which is worth 3 lakh rupees, and it could be an MRP which is 3 lakhs, your cost would be much less. The bag, the moment you've given a bag to somebody for review and he or she reviews it and puts up her comments or his comments on the websites, and retains the bag, that amount is taxable, and that amount gets taxable at the time you've given the bag itself. So you need to deduct the 30,000 on the 3 lakh and deposit it with the government. If the understanding is the bag comes back to the company, then the whole this thing is that no, there will be no tax, because ultimately it's not benefited. Again, there could be a situation where you would just charge a nominal amount to the influencer and not take the product back, because it is anyways there could be hassles in taking it back. It anyways does not have a market because you wouldn't sell it to anybody else. So those kind of situations, then there is no clarity on whether the actual amount paid or whether the benefit in terms of the difference between, say, an MRP and some nominal amount that is charged will be charged to tax. So that bit is something which is open. Again, this will be litigation prone. There will definitely be further clarifications or court clarifications.
Observation.
Yes, surely.
I think in order to determine whether TDS applies or no, one has to keep in mind that section 194R is a replica of 28(4). Value of any benefit or perquisite derived in the course of business or profession. So if a payer A gives something to B in the course of business or profession, one is to determine, is it a benefit which I am giving? And second, whether the recipient is making a payment to me. So if it's a benefit meaning free of cost really, that will be your guiding factor to decide whether section 194 TDS will apply or not. For example, one of the audience here, one of the participants has raised a question. If a free item is supplied under a warranty, will it be exempt from TDS? I think answer will be yes, because for warranty you would have charged some amount in the beginning of when you do a transaction or sell some items. So warranty is a commercial contract for which you normally typically charge. So under warranty, if you supply some parts, spare parts, something, then there should be no TDS, because it's not a benefit or perquisite arising free of cost to the recipient or to your client. He has already made a payment to you in the beginning of the transaction while buying your products or items. So there should be no TDS under 194R. Yes.
Thanks, Sanjay, for that. So basically, there is again a lot of ambiguity, and especially the ambiguity is because the way the question was framed itself. Whether there is any benefit accruing on account of rights, etc., which could be a situation where a certain group of shareholders subscribe to rights, or certain group of shareholders don't subscribe to rights, and there could be a situation where the allotment happens uneven in view of certain section of shareholders not opting for the rights issue. The question is whether the difference or whether the benefit, if at all, if it is accruing to somebody in the form of a higher shareholding because he or she subscribed to the shares and the other party did not. So the incremental increase in the value of the company that is going to you because of such an event, whether that is a taxable event. There have been cases on this already, which and it has been analyzed by courts in a lot of rulings. What they have said here is they've very precariously only considered in the question itself. They've considered only a situation where the question asked is in relation to a company in which public are substantially interested, and their answer is as long as it is such a situation and this is not a private limited company, then there is no requirement or a 194R requirement, even in case of a disproportionate allocation of shares that happens. Issues in case like there's no specific mention, but in relation of private company, what happens is not very clear and will only need time to be decided on. What we've done was there were a lot of questions even around how the applicability needs to be considered. So the law is very clear here. And this dichotomy appears or arises because the situation is that for the first 3 months, the provisions were not on the statute. These become applicable only for the last 3 quarters of the year. What happens is you could have a situation where you could have exceeded the limit in the first 3 months itself. Say, assume again the jewelry example, you gave somebody a 40,000 worth jewelry in April 2022 itself. That amount is not liable to any withholding under 194R. the 194R applicability will only be for transactions which are from 1 July 2022. But they also require you to consider the amounts, if any, given in the past while calculating the amount. So basically, serial number 3 could be a situation, or actually 4 could be a situation where you've paid INR 15,000 before in the first quarter and 6,000 in the second quarter. So where you actually ended up increasing the total amount of gifts in the year to more than 20,000. In such a situation, the guidance is that you deduct TDS on 6,000 only and not the entire 21,000, but still have just consider it for the purposes of reaching the threshold and then deduct basis this. So the next two examples are again first, the next example is where you've paid 25,000 in the past. So it's similar, and 10,000 in the later period you have to pay on 10,000. And the last example would be where you've paid nothing and only paid 30,000 in the later part of the year. Then the entire amount is applicable to tax. Also, how do you calculate the value of the benefit of the value? This has been prescribed. So that's basically the way the questions have been listed for this. Also, then there have been clarifications around the procedures, etc. How do you have to pay this in case the deductor bears the tax? It has to be grossed up. So these are all the very basic mechanisms that have been prescribed for withholding taxes. Again, this brings us to a last couple of slides on the presentation. Basically, what is it that has been said about such circulars in the past? Although it is the settled principle that CBDT issued guidelines are not, they are generally only for guidance, or they are only generally for removing any difficulties in the interpretation or in the applicability of the provisions, and they cannot override or they cannot be binding on the assessee. But contrary to that, under this provision, what they've specifically stated is that because this has gone through the entire parliamentary systems, etc., they have specifically stated that this will be binding on the assessee. Whether that is correct, not correct, time will tell, and Sanjay has a comment.
And interestingly, I'm reading out subsection 3 of this new law. Every guideline is important. Every guideline issued by the board under subsection 2 shall, as soon as maybe after it is issued, be laid before each house of parliament and shall be binding on the income tax authorities and on the person providing any such benefit or purchase. The point is, can the guideline issued by CBDT be binding on taxpayers? It's a guideline, right? It's not even a circular, it's a guideline. The second law is a circular issued by CBDT binds only the tax authorities, and rightly so. But they are not binding on taxpayers. There are enough authorities, UCO Bank, KP Verghese, and so on. And here the law says guidelines issued by CBDT will be binding on the person who is providing such benefit or purpose. So I think this is an area open for litigation. One can possibly consider this challenging in the court of law.
Sure, thanks Sanjay for that. So basically, the next slide is on certain areas that one needs to develop upon. Of course, practical implications on whether a doctor will now be willing to give his PAN card on all this, or whether the hospital would entertain such requests where really there is no benefit accruing to the hospital, and there are so many hassles that will happen. Also, whether, as Sanjay earlier alluded to, whether this is really a charging section of sorts, because they seem to be trying to include transactions which were otherwise outside of the tax net. A classic example is loan settlement, amounts that are paid as a one, or amounts that are waived by banks as a one-time settlement loan. Initially, the clarification that came and said these are taxable. There is no doubt. because there is a benefit that is accruing to the people. And then later in the second set of clarifications that came, they actually clarified that this will be a very difficult position, especially for the banks, because anyways they are getting less amounts. And if they were required to say shelve out at 10% out of that, which really doesn't make sense, because it affects their cash flows very badly. So they actually came up with a clarification saying in case of certain banks and BFCs, etc., these provisions will not apply, but they still seem to be suggesting that these are benefits that are accruing. There are n number of cases on this point already on whether a loan waiver is taxable, not taxable. So are they trying to, by incorporating TDS provisions on certain receipts, certain payments, are they trying to cast the net much wide than what they could have, what they should have? Is a question which is open. Again, the third point we've actually discussed already. So where I get a jewelry worth 40,000 from one of my clients. Under 56, it's exempt, but he will have to deduct tax 4,000 deposited, and it'll then be on me to explain the same when I'm filing my return of income, and specifically state that there is some TDS that I'm claiming but not offering an income against that. Similarly, whether business will be held liable for incorrect advance taxes. This is also a very interesting point. Let's assume a situation where there are no clear guidelines on how you value a certain product when you are gifting it to a social media influencer. You thought you've done a good job, you've got a valuation done, and the value that you thought would have been covered under section 194R was 1 lakh rupees. Tomorrow the department realizes, no, this is not correct, and the actual value that you should have considered for 194R was say 2 lakh rupees. So what happens to the difference? Is this a situation where I have short paid my TDS, whether I have not met the obligations that I was required to, and the implications of a shorter deduction of tax are quite wide, which is on the next slide. For the next slide. So basically, the TDS, once you've not deducted TDS, there are these three implications which could arise. One is penalty for non-deduction. The other one is, of course, interest till the time it was not deducted. And thirdly, there is a 30% disallowance for non-deduction of TDS. Now there could be, like, if one was to go back to one of the questions that we'd earlier discussed, where it is not clear as to who's taking the benefit, who is real beneficiary, is there anything that has accrued to the beneficiary, and therefore the suggestion from the board has been that you don't claim the entire expenditure at all. So one will need to do, if at all one is in such a situation, one will need to maybe weigh on what is worse, whether the sum total of 1, 2, 3 listed on this screen, or whether claiming the entire expenditure and maybe do a match, because this 1% per month is a running account, because you would not have deducted ever. So those kind of decisions one will need to take. Going back to the previous slide, basically, again, the burden, this is again a point which is more administrative rather than anything else. They have prescribed a form under which you will need to deduct and deposit, and then file that report asking what it is. Also, as far as business and professionals are concerned, this is one more filing, one more data point that one needs to be mindful of. Also, as a recipient, I will need to be mindful whether the proper amounts are getting reflected in my 26 AS, in my accounting, in my AIS annual information statements. So with that, I think I'll ask Sanjay to maybe comment on what his overall view on this point is, and post that we'll take questions.
Thanks, Sanjay. So I think in summary, I would like to specifically refer to 3-4 conceptual issues and points here. Between payer and pay, the payer is to first determine, am I really giving a benefit or perquisite to the recipient, and whether it is falling within the language of 194R. Second, a business also needs to take a call. This being a new section and being very wide in language, and this is a TDS provision. The payer gains nothing by taking an aggressive position. So in case of a genuine difficulty or doubt, till government clarifies, it may be a wise thing for a business to err on a safer side and deduct TDS wherever there is a cash available to deduct TDS. That's number two. Number three, given very wide language, coupled with the intention expressed by the Honorable Finance Minister in her budget speech and the language of section, I think this subject is open to huge litigation. Huge litigation. And fourth, I think time to time people should reach out to government seeking clarification from CBD that these are the issues which are coming in day-to-day running of a business. What will be the correct position? What will be the reasonable position to adopt so that a person who is making bona fide payment in the course of business or profession does not end up getting into unnecessary litigation. Yeah, we have some questions to answer. The first question is, we are sending some goods for testing purpose to USA for taking AMCA certification on non-returnable basis. Okay, do we need to deduct TDS on these samples sent to USA? Now, this section applies when the recipient is a resident of India. So, if you are sending to a non-resident company, then this section will have no application. So, answer is no TDS. Whether in case of group benefit, entire expenditure needs to be disallowed or only leisure component. Now, so one, as I said, one has to determine that if a total amount of, let's say, hypothetically is 100 rupees, so how much is really the benefit of perquisite accruing to the recipient? You have to first determine that portion and deduct TDS accordingly. So conceptually, entire 100 may not be subject to TDS under 194I. So it's again a question of fact. And if one looks at both the circular, they are very clearly saying that each case depends on its own facts and circumstances. So one has to see out of this total composite payment, what element is a leisure element, or basically what is the benefit of perquisite going to the group entity for which it is not making a payment.
Just a point to add there. So basically what they've done is they've kind of allowed 1 day prior and 1 day after the date of the actual event, also allowed as, say, a travel, stay, etc., etc. So to some extent they've given some sort of a leeway there, but otherwise the whole understanding or the intention is to try and curb benefits being passed on without them having gone through the bank accounts.
Yeah. The other question is whether in case of group benefit, entire expenditure needs to be disallowed or only leisure component. That is, in case of a dealer conference, whether we can exclude traveling and lodging, boarding expense and only disallow leisure expense like sightseeing. Yes, I think that will be a reasonable position to take.
So another question is, we reimburse mobile bills and data card bills to our employees. Will it be a perquisite and TDS is applicable? Again, a factual scenario, but probably not. It's quite a, and assuming the thresholds are also 20,000, which is a decent amount for a mobile reimbursement. Chances are you could check a position.
No, and the conceptual point is, this section applies for a business or profession, not for employee-employee relationship. So this point will be outside the purview of 194R. The correct thing is one to see the salary taxation, whether it's a perquisite within the meaning of section 17. So 194R is only business to business, not employer-employee. Principal to principal relationship.
Yeah, and there is a question on, we have list price defined in the system and sales is done on multiplier basis. List price is INR 100 and multiplier is 0.25, meaning thereby sales price will be INR 25. Will amount to discount and TDS is applicable? Sorry, I didn't exactly get this question. You could probably reach out to us separately and we could send a response to that. Whether Diwali gifts given to business partners will attract TDS? Yes, to my mind, if the amounts exceed and if this is a benefit which is in the course of business, even for the recipient, more likely yes.
Sure. Even the plain language, yes, is likely to attract if you meet the threshold of 20,000 rupees.
Do we have any other questions? Okay. No further questions.
So thank you very much for joining us for this webinar and making it interesting. Thank you very much. In case you have any further questions or in a day or two you get some additional queries, please feel free to reach out to us on email or on phone call. We are happy to respond. Thank you very much. Thanks.
Thanks a lot. Thank you.